So Hood got 2 new price targets today, upgraded from JMP 53 to 60 and Barclays 49 to 54. That was cool, but then I checked the earnings estimates and it was 654 million a month ago, then 820 million, then 880 million a couple weeks ago with the episode with Joshua. Today it's 930 million. So I think all of us need to be prepared for a massive Q4. But the problem is, as you said, Tanner, if January numbers are kind of and we've got 80 million or 90 million of contra revenue / legal fees to pay. Here's the question. Do you think the market fades a really good Q4 because they know Q1 might not be that good?
Yeah, I think it's hard, right?
It's hard. It's real. I don't think anyone, because like after you do $1 billion in revenue, like you should get some momentum. But if the next quarter sucks and we're pricing in future growth, I mean, what do you do?
I was even talking to you guys after the show ended last episode, and I was like, hey, like I don't mean this sincerely, but like, should I potentially try to trade this? Because I do actually think Q4 will be stronger than Q1. But even then, I mean, like we're a couple days into an entire quarter. Things can turn around, but it just seems like this might be a longer swing than that. So in my opinion, it will be worse than Q4. And it's just a matter of if people want to trade on that. I don't think many of you guys will be doing that. And I probably won't either, but
yeah, long-term investors, I don't think will at all. But I mean, I think I have less faith in analysts maybe than you guys, just because they missed this is a little bit more obvious, but PayPal, different name, completely different, shifting thoughts. They changed the way that they were reporting their EPS, their adjusted EPS, and the market missed that somehow, even though it was very clear and transparent in earnings calls and guidance. Multiple places of their slide, multiple places in the conversation. And there's still places where it shows that PayPal missed Q1 of last year, even though they did not. And they were like, oh, that revenue is down. And it caused a real dip in the stock too for a little while. I don't know, how long that lasts. It doesn't last forever. But it's one of those things where it's like, man, if an analyst was even just like mildly awake and they saw that, they would be able to capture that and price that in. And instead the opposite happened. So it was weird. It was annoying. And there are really, really good analysts out there, but a lot of them are just covering so many names and just kind of mailing it in. And I know that there will probably be some, even though Robinhood is not like the most covered name, that do the same thing on Robinhood.
That was the non-GAAP changes, right? Because I think they included stock-based compensation. Is that what that was?
Yes, correct. I had it in reverse. You're right.
Which is a really good change. Like that means that they could also adjust to say, hey, we won't be diluting you on the back end, like hold us accountable for another thing. And yet the market misses it. It's silly.
It missed that it was even happening. I was like, what happened? How could they miss this? I know I track it a little bit closer than most analysts, and you do too. But yeah, and maybe part of that too is, they're focusing on the next thing and they've already done their hood work. And they'll look back at it maybe in next quarter and they just won't revise. But the reality is I think that it might cause a little bit of a drawdown. But
are you nervous that they keep raising the goalpost on these expectations?
That I don't like either. I didn't see the 930, whatever it was, million. Like at 700, it was like, oh man, they're going to smash. 800 is like, yeah, that's fine. 900 is, they'll probably beat that, but it won't be by a large amount. And if there's something that we're missing, which, well, could be the case, they might miss that despite having a ridiculous quarter.
So here's a question, because I think this is a good conversation. They were expecting 650 and imagine Robinhood comes in with 930, huge beat. Now they're expecting 930. Imagine Robinhood comes in with like 920. Is this a game of manipulation, or is this a game of the analysts trying to do their models and their models are accurate enough to predict 930, which means we shouldn't be that upset about it, right?
The latter.
Yeah, I don't think that. I think that's enough. I don't care what the analysts say is going to come out. At the end of the day, it's how expensive is the stock versus the earnings that they're putting out. So if they want to place it high or low, it doesn't actually change the valuation of the company. It just changes the sentiment. But and it also just means that there is price revision for this beat. It just happens during the quarter, not at the day of the earnings results.
Yeah.
But that's going to happen for Robinhood if they start showing off 3 months of trading volume and what they call color versus, just like showing just the quarter, like what SoFi is going to do.
Yeah, I mean, look, I think that's the other really interesting thing about Robinhood is that they are so cyclical that for them to even give more data simply means that the market's then going to be able to interpret that data. And if the market interprets that data, then they're going to be able to issue new, upgrades or ideas on how they think of where the stock is going to trade. I mean, the reason we got 2 big upgrades today from JMP and Barclays was because they probably looked at the December numbers. They ran their estimates and they're like, all right, Robinhood's going to crush. EPS is going to go up. We can't have this small of a multiple, which to me, the sort of point here is that, and I wrote about this on X today, but if the stock does take a nice dip, we're at 39. If we actually go back to like 30 or 32 or some really tough dip, I feel like if we get a dip after their best quarter in the history of being a public company, and the reason for that is because of Q1 volatility, that might not be a 100% growth quarter like this is going to be. Maybe it's a 25% growth quarter or 20% growth quarter. That's a dip to buy because the enterprise value is going, in particular, EV to sales is going to go down substantially if we take a nice dip. Their cash on the balance sheet either goes up slightly or stays the same, which is going to be nice. Their PE and forward PE takes a massive haircut if they produce a massive Q4 growth quarter with decent Q1 growth and the stock were to fall. It's the same story of October 31st when the stock went from 30 to 23. Like that was a great dip to buy. And if that happens again, it's not easy to get those dips. I would get excited about that.
Yeah. Yeah, I'm really hoping too that they'll actually post a little bit higher revenue than expected. Not only just for the beat, but it looks really nice when you have 100% revenue gain year over year. That doesn't happen very often unless you're just a micro cap or something like that. So that I think that will.
That's the number, Roy. We have to get 934 to get that number,
and that'll get so much attention, more so than 96%, just because psychology. It's like, whoa, it doubled its revenue, like literally doubled. I mean, maybe they'll round up if it's 99 or 98, but if it's 93, 93, not bad.
Let me just say really quickly, it's gonna happen. No, actually, I'm not gonna say it because you know what? Actually, whenever I gave my billion plus prediction, I didn't realize that I had asset because we were toying with the numbers. So I had assets under custody at 210 billion, pretty freaking high. And I also had the crypto take rate at the 48 points, not the 42. It will go up, but it might go to 44 or something. So, but I think it beats 930 all day long.
Yeah, I got to raise I said 927. I've got to go to like 935 now. I have to, because like if the analysts
say more bullish than Wall Street.
That's what a lot of analysts do, though. Like the price target is the clickbait for YouTube. You put that in the title, you get them to read your report or buy their report or whatever. Somebody else raised. Well, I better raise too. Or the stock is going up. Nothing has changed. I better raise my price target because it just that's the way the business works. Not everybody, but there's a lot.
Let me ask you, Amit.
Yes,
because you're asking me, does Q1 weakness over the course of 13 potential days, and it might not even be true, but let's just say it is. Are you still buying this dip, or this name? Let's say,
dude, I've been waiting for a real dip. So yeah, I'm kind of like, look, if Q4 is I don't really have any anxiety. This earnings is the least amount of anxiety I've had going into Hood earnings. And part of the reason a lot of people know, like my personal situation, I had a lot of options on Hood. I sold those in January. So now I still have some options. They expire in 2026 and I have a lot of stock. So for me, it's like the anxiety that they have to get over a certain price for me to sell the option and make money, or else the theta decay kicks in. It's like none of that's there. So if they go back to 20, dude, like, please, like, I don't care. I will buy it as hard as I can. The question is, where is the market going to allow them to fall? And it's been very resilient, even with all the volatility we've seen over the past couple of weeks. I mean, this thing is really not leaving 40, which tells me that the market's getting ready to give them a really strong Q4 because they know Q4 is going to be good. And then the question is, if January numbers are decent, which I think they will be, is this go to 45, 50? Like, where does this end up going?
I would really. We know that the results are going to be really, really good. It's not the worst thing in the world, and I'd actually be very excited for it. And I've wanted this opportunity before with Hood as well, and I just Hood is the only thing I bought. I'm actually even exercising my last option of Hood, $20 call next week, next Friday. Just made sure that I had it checked on automatic because usually I don't. Usually I sell them before. But the best case scenario for us longs is not that Hood has this fantastic beat and then the stock is off to the races. The best case scenario is they have this fantastic beat and there's something weird that doesn't really matter that the market doesn't care about, and it tanks this thing down to like $26 a share. I'll buy a lot of leaps at $26 a share.
Yeah,
I might even buy some leaps at $26 a share.
Oh man, yeah.
Tanner, have you ever bought call options on anything before?
No.
Do it.
Okay.
Peer pressure.
Yeah, I mean, I thought about buying call options on Nubank, especially whenever it crashed from 15 down to 10. But
Dude, you used to buy some leaps on SoFi, bro. Like, if you think they're getting to 25 or something, I don't know. I have leaps on SoFi. I think Roy has leaps on SoFi.
yeah, I just don't like putting an expiry date on my positions. Like anything can happen.
What
Like,
makes
things
it
change.
fun. That's where you get the anxiety. That's the fun part.
And it's not for everybody, but where I like to do it is when I have a company that I believe in long term. I want to be in it long term. Well, I guess Hood, I thought it was short term, but ended up not working out. But for SoFi, for Palantir, for PayPal, which I even made a little bit on that, surprisingly. Still in PayPal, just I don't have as many leaps as I did initially. What I'll do is I'll buy a bunch of shares, and those I plan to just hold and just keep holding unless something changes in the company or I need the money for something. But the plan is hold 5-10 years, something like that. And then the options, what they'll allow me to do is actually take profit on the position without actually selling any shares. And so, I'll do it with whatever. I'll size it according to the strength of my conviction and, of course, the price level of the stock. So when SoFi tanked into the $6 range just before the big run, I was like, you know what? I'm going to double my leaps position, and I have a lot more in leaps for SoFi than in shares, which painful when it draws down, but it's been a really nice thing. So with Robinhood, I have a lot of conviction. I don't own any leaps right now because I see it in and or near the fair value range. I want to buy leaps on a name that I have long-term conviction in, strong conviction in, but that I also see as fundamentally and unquestionably undervalued. And there's not that many names out there. SoFi when it was in the 6s, yes. PayPal when it was in the 60s and 70s, yes. I bought some Nubank just because, like you said, it really collapsed, and I was like, man, this is too much. And Robinhood at 26, 27, maybe 28. We'll see what the premiums look like. I don't think that'll happen, but if the market wants to give us that, okay.
But because we got to remember, Robinhood's market cap right now is $35 billion. And they have $5 billion in cash. So enterprise value is $30 billion. If they get to freaking 28, as you're saying, Roy, their market cap will be $24 billion with an enterprise value of $19 billion. It's going to be a screaming buy. Yeah. But I feel like we would have to have so much turmoil to get there because it's not going to be Hood specific.
Yeah, and we've seen that in the markets. I mean, there's been a pretty good drawdown. It's not quite past the 10% mark, and we may not get there. We might. It's uncertain. It's not too unexpected. The last I was looking at charts, the last 4 previous earnings cycles, so this is the 5th in the row, we've seen weakness in the market about the same time right before earnings, and then even during earnings season, and then as earnings are actually turn out pretty good, and there's other catalysts too, but the market is like, oh, okay, so we're still growing then. So all right, we'll keep going up. So it's not a huge shocker, but if in combination with some Robinhood thing that just gets attention and the market pulling back, it easily could, fall into the 20s. That's fine. I'll buy that dip.
Yeah.
Yeah.
So overall, 45 million from the SEC, nothing burger. And we'll see tomorrow if the stock reacts to it, but as of now, it kind of doesn't care.
Yeah, I don't think they're going to care at all, especially because Q4 is so. I just wish it fell on Q4 shoulders. Like then it would really be nothing.
Oh yeah.
Yeah, 100%. You know,
Yeah,
know.
Q1 will be the beginning of much harder comps. Q4 is kind of the last of the, it was okay, it wasn't great. So yeah.
So we
Do we
got
want-
what 2.5 million from the Jan 1 Bitcoin giveaway,
Mhm.
and then we'll have to see how much they actually bring on. Hopefully, we get some color for that. Maybe Vlad comes on the Robinhood Weekly or something to try to tell us like their marketing plans for Q1 or something. That's 100% like my wishes and not some. I'm not trying to allude to anything, but
well, dude, that's another thing because if Hood takes a massive dip for whatever reason, they already told us they're doing 3 events this year, which means we know they're going to add more shit to gold. We know they're adding more shit to crypto. And then the third event, Legend, they're going to probably add more stuff to Legend. And then on top of that, they have a Trade PMR acquisition closing and a Bitstamp acquisition closing. So there's 5 major things happening over the course of the next 6 to 12 months that are all going to be tailwinds and catalysts for the company, which again, if the street wants to give it to us under 30, like be my guest, because there's just too much they're doing for, I think, for them to stay at those levels.
Yeah. No, that's the one great thing about Robinhood is even though the markets that they're playing in fluctuate, they will enter more markets. So
and then if we really get a dip, management has 900 million.
That's
like,
right.
Dude, it's one of those stories. It's Crossroads is a golden confluence, right?
Mm-hmm.
There's so many angles. If the stock dips, they have money to do a buyback. Why do they have money to do a buyback? Because they're getting so much in deposits. Why are they getting so much in deposits? Because they're executing so well on getting people onto the platform. Like, and it's still, and I still think it's relatively cheap or closer to fair value, but it's nowhere near egregiously overvalued at $39. No way.